Today, my partner Nicholas and I will be presenting Apple stock as a buy.
Apple's company overview. Apple uses its strong brand to compete in a heavily competitive market, seemingly expanding their line of products. Started as a device company, today they have blended their digital content services, defining themselves more broadly. Focuses designs and develops and sells consumer electronics, computer software, and online services. Apple is well known for their large revenue. Worldwide annual revenue totaled $265 billion for 2018. They own 506 retail stores in 24 countries, and the chart to the left represents Apple's employee breakdown. And to continue the company overview, the revenue by product, the iPhone is 52.1%. The iPad goes on to 7.27%. The Mac goes on to 10.92%. Wearables and home accessories are 10.18%. Services go to 19.54%. Revenue by region, 46% of the revenue comes from Americans, 23% comes from Europe, 8% from Japan, and 6% from Asia Pacific. And market position. Apple dominates the global electronics market in the technology sector. And their shareholders, they have 7.53 is owned by the Vanguard Group, 6.35 is owned by BlackRock, and 5.60 is owned by Berkshire Hathaway. And the company statistics, market cap of 1.3 trillion, enterprise value of 1.3 trillion, a 52-week range of 143.80 cents to 300.60 cents, and a dividend yield of 1.02%. They have free cash flow of 5.3%, and their PE currently is 23.49%. 23.49. Sorry, and their P book is 14.56%. The return on equity is 57.5%.
Management and governance. Apple's 137,000 employees are led by CEO Tim Cook, who has been with the company since 1998 and has been the CEO since 2011. Major shareholders. Apple does not have a controlling shareholder. 65.73% of the company is free float on the exchange. Legendary investors Warren Buffett own a 5.6% stake through the Berkshire Hathaway. Independence. The board of directors consists of 8 members, 5 of which are independent, non-company executives. There are no red flags in the company with related party transactions, shady accounting, or poor allocation of capital. The chart to the right just shows the Apple's growth performance from when Tim Cook took over as CEO compared to Steve Jobs. Investment thesis. We rate Apple as a buy with a target price of $359.35 per share. Our recommendation is driven by the following key points: brand loyalty, growth potential, profitability, and business model. The chart on the right just shows their revenue by region from Q4 of 2019. With 46% in Americas, 23% in Europe, Asia Pacific is 6%, Japan is 8%, and Greater China is 17%.
Alright, now to get into their investment risks. First, their design trends. Apple's core product continues to be the iPhone, which makes up 52% of revenue. The company could possibly struggle to remain at the top of the smartphone industry if they ever fell out of style. However, Apple has proven to still be a top choice, even after design changes customers may not appreciate. And emerging markets. Apple sells in many emerging markets, where growth may be slower than what is expected. Political turmoil, currency instability, and market velocity are common places in China, India, Brazil, and Russia. Then onto the industry analysis. Apple continues to retain their title as the largest technology corporation in the world and the 11th largest corporation in the world. Apple remains to have the largest smartphone market share in the U.S. In Q4 of 2019, Apple comprised 49% of the smartphone market share. Even though Apple only increased 7% year to year, this is very impressive given that the U.S. smartphone market as a whole has declined 1% year over year.
The chart on the right just shows how Apple continues to lead the market in premium smartphones. Market snapshot. Apple was founded in 1977 and is headquartered in Cupertino, California. Apple designs, manufactures, and markets smartphones, personal computers, tablets, wearables, and accessories worldwide, and also sells various online-related services. The company offers iPhone, a line of smartphones, Mac, a line of personal computers, iPad, a line of multi-purpose tablets, and wearables, home, and accessories comprised of AirPods, Apple TV, Apple Watch, Beats products, HomePod, iPod Touch, and other Apple-branded and third-party accessories. They also provide digital content stores and streaming services, AppleCare support services, and iCloud, a cloud service, which stores music, photos, contacts, calendars, mail, documents, and others. Apple also sells its products through its retail and online stores, direct sales force, third-party cellular networks, network carriers, wholesalers, retailers, and resellers. Moat analysis. Apple has a wide moat, source of competitive protections. Brand. Apple is one of the most recognizable brands in our country and very prominent around the world. The Apple brand is always distinguishable and recognizable through their logo. Distribution. Apple has a very strong distribution, being sold in 24 countries and owning 506 stores. They also distribute their products through providers such as Best Buy, Verizon, Amazon, T-Mobile, and Sprint. Economics of scale. Being such a dominant market leader allows Apple to adjust to any current economy of scale, including marketing and production costs, and the ability to fill the channel with additional product launches.
Now to get into the Fortify focus. For bargaining power over customers, we gave them a 4 out of 5. Apple sells to over 1.4 million customers throughout the world, making them not easily replaceable. And then intensity of competitive rivalry, which we gave a 3 out of 5. There are a lot of companies doing what is Apple. There are a lot of companies doing what Apple is doing, but people prefer Apple because they have a premium feel to them. So that makes Apple stands out above its larger competitors. Bargaining power of suppliers, 3 out of 5. Many people would have trouble if they were given raw materials to use in their iPhone and would prefer a manufacturer phone that's premium like Apple's, given the suppliers' little power compared to Apple. And threat of substitutes, which was given a 2 out of 5. Samsung and Apple devices might be a good choice for some people, but a lot of people prefer the premium brand recognition that comes with an Apple product. And barriers to entry is a 5 out of 5. Apple has one of the strongest brands and distribution systems ever created by a company. These have built over many years and billions of dollars, and won't be easily eroded by a new or existing competitor. And now for financial analysis. Profitability. Apple has exponential profitability, as demonstrated by their industry-leading profitability ratios of 37.82% gross margin, 21.24% net margin, and ROE of 61.6%. Over the past 5 years, that is an increase of 25.64%. The technology industry has an average ROE of 29.94%, and the S&P 500 has an average ROE of 15.29%. These numbers show how Apple is significantly more profitable when compared to the rest of the technology industry, and even more profitable when compared to the market as a whole. Growth. Apple continues to grow exponentially, with 2019 annual revenue at $260 $174 trillion, and a projected revenue growth rate of 12.1 and an earnings growth rate of 12.9.
10-year
returns at an extraordinary 25.21% 10-year return. Apple stock has proven to outperform the market. Apple has returned 117% higher compared to the NASDAQ. Compensate 176. Composite 176 higher compared to Dow Jones large cap. 64% higher compared to Alphabet Inc., Google, and 22% higher compared to Microsoft Corporation.
Revenue drivers. Markets. Apple has been growing its market excessively, especially in the last 2 years. Apple's revenue from accessories jumped to take up 10% of their entire revenue in the span of 1 year. Pricing power. Due to Apple's strong brand, the company has consistently been able to raise their prices. New products. Apple's access manufacturing facilities and unmatched distribution channels around the world allow them to push new products on a global level. The chart to the right shows Apple's revenue by product from Q4 of 2019, with 52% being the iPhone, 7% iPad, 11% Mac, services of 20%, and 10% in the category of other. Valuation. Our 2020 target price is $359.35 per share for Apple, representing a 20.8% upside from the share price as our valuation date before COVID-19 and a 49.9% update from the current share price during COVID-19 of $241.41, which is the close as of April 3rd, 2020, with a terminal growth rate of 8% over the next 5 years. Valuation analysis. Apple is currently trading at a lower number than it usually performs, their PE ratio of 22.6, and a 12.93 EBIT ratio. On a yield basis, the stock looks attractive at a 1.25 dividend yield and a 6.4% FCF yield.